S&P is still, it just made, again, new all-time highs. It cracked the new all-time highs last week. We are off to a fairly good start today. Again, not about today, not about tomorrow, but right now we got the SPY in the high 560s. 580 is still our target. I have that target by election day, but I think it's going to come much quicker. In fact, I don't see any headway at least till mid-October. And the reason I say that is because we're still in a neck-and-neck race on who is going to be president. All right? That's the first thing. That might be one of the most volatile things about the market. But take a look at this trend. It's still intact. It's still high. And we're starting to see more consolidation to the upside. I like this. All right? And also, no news is good news for about the next 3 weeks that we can see in terms of earnings reports. Q3 is not due out until really about mid-October. We start seeing the big companies start to report. The bond market. So TLT actually pulled back from around 101 down into the high 97s after the Fed cut. That's typically something that, they really priced in. They priced in hard, and we saw that buy the rumor, sell the news happened just after last week's Fed cut rate. So now you come into today and we're down in the high 90s. We could see some wiggle. We could see an ABC correction that happens here that could take us down to 95. That would be the 38% retracement, right? It's more of a buy the rumor, sell the news, but we also see a changing outlook or potential changing outlook on employment. USO, this is the oil fund, the United States Oil Fund, and that is still in a downtrend. However, last week we saw some moves to the upside. Really what you're seeing is this. You're seeing a multi-month downtrend that started earlier in the year, right? We put the pitchfork up to show you where the movement is. We're going to come into some potential resistance around 75. But even if we hit 75, we're still bearish. We have a seasonal bull, short-term seasonal bull, going to last another week or two. And then we revert back to our long-term seasonal bear. That's going to take us into February. So I still think the long-term outlook for oil is lower. Gold continues to its all-time highs. That's because of inflation risk, uncertainty, geopolitical tensions, and of course, the thing I've been talking about all year long, which is currency debasing. Finally hitting gold. Gold is at 243, inching ever so closer to our first initial target of 250. And then I see about 265 for GLD if we run through the 250 target. All right. Bitcoin. Just when you think it's going to go lower, then it pops up again. We hit a 7-day high that was around 64,700 and change. And we've been kind of still in this consolidation mode. That longer-term consolidation chart, 70,000. We haven't seen 70,000 since April. We got very close to it. Actually, no, we got close to it in June. But 73,250, that's the high. That was back in March of earlier this year. So we still have that consolidation. We need to break above and close above 67.5. Then I start to feel real good about where the longer term, where the liftoff takes us for BTC. The bullish case, you've got adoption. We're still in adoption. In fact, I'm actually taking a look at longer term charts, almost like an Elliott wave trader would, to look and see what the long-term multi-year history tells us in terms of where we are and where we're likely to go multi-year. This is something that I'm doing separately. But you've got adoption, you've got the finite supply, and then you've got, just like I was talking about with gold, you have currency debasing. This is the VIX. The VIX is currently trading just above 16. It's well off of its highs of 65, but yet here's 65, and here's is 12, and here's where we are. So I believe we could still see the VIX go lower, which would be a great bullish case for the overall markets. Want to show you some seasonality. So looking at money calendar seasonality, we talked about this at the beginning of September, that it was bearish as we did not see the markets go lower after the first week of September. We started reanalyzing the data. And what we noticed is there was a shift where the bearishness starts to come in August and starts to retreat in September. And when we started looking at 45 to 60 days out and then 60 days out and longer, things got progressively bullish. Here's where we stand right now on the 23rd of September. you've got indices like SPY, DIA, QQQ, even the mid cap, all bullish going into anywhere from the end of November to the middle of December. All right, all having 90% accuracy, all having some decent return, 5% or higher during these time frames. All right, last losers on all of them were 2018. And all the power meters are positive too. So this is also telling us that seasonally things look really well for the overall markets heading into really towards the beginning of December. So my takeaways look like this. Trends and seasonals up into year's end. It's an election year. You know what that means? Typically up into at least November and possibly the end of the year. Volatility is still dropping too. So that's even a bullish sign, at least until we get into the big Q3 earnings, which are about mid-October.